Hey guys, it's Mick here with Lincoln Select Real Estate Group at Nebraska Realty, and I have a special guest today. I've got Chris Elgert here with Lincoln Federal. I think president of the mortgage department there. Been in lending on residential real estate for 20 years. Chris, thanks for joining me today.
You bet. Excited to
Uh,
be here.
Awesome, awesome. So, guys, I wanted to bring a lender into the picture here because that's a huge part of buying a home. And Chris has agreed to come in and talk to us about some common myths that they hear regularly, and as well as things that we hear as well. So we're going to hit five of the most common myths that most home buyers approach us with, and people like Chris when it comes to buying a home. So, Chris, you ready for this?
You bet.
Awesome, awesome. So, Chris, one thing I know that you hear all the time, and we hear this nonstop, and that is, the myth around like what it takes to buy a home as far as a down payment. And we talk to people every day that think you need 20% down. So, is that true? Do I need 20% down to buy a house today?
You do not. Honestly, what we run into that quite often with people who come in and think that they're having to save to purchase a home, and we have so many programs across basically all types of financing, whether it be conventional or VA or FHA, USDA financing, where you need very little down. Almost, because it was the myth that used to be there. Everybody was saving for 20% down because that's where you eliminate the mortgage insurance. And to be honest with you, even on the conventional side, you can do something as little as 3% down. So, our typical first-time home buyers may be looking in the 250,000 range, and 3% is 7,500. And today, there are even grants in place and first-time homebuyer programs and through Nebraska Investment Finance Authority where you can get down payment assistance or even grants. There's a grant available currently up to $7,500 that would cover all of your down payments. So people are always shocked when they come into the office and we actually start looking at hard costs to get into a home and how little it actually takes. With USDA or with that federal home loan bank grant, you only have to have $500 of your own money in the transaction. With NIFA, Nebraska Investment Finance Authority, you only have to have $1,000 of your own funds into the transaction. And so when you think about it from a buy standpoint, where you may not have a first payment for up to 60 days from the date of closing, and it's almost like getting in the house for free.
Yeah, absolutely. And and again, average price point in the area right now is right around 300,000. So you're saying $500, 20% would be $60,000. So that's a huge difference there.
Correct.
Awesome, awesome. So, Chris, second myth that comes up, and we deal with this often, is credit score. People think you've got to have an 850 credit score to buy a house. That's just not the case, is it?
No, as a matter of fact, we can do financing on the government side all the way down to 600. Conventional is usually right around 620 with each of our investors that we have. The first-time homebuyer programs are as low as $640, and so we get people that come in all the time that may have like a medical collection or a few things in their past, some missed payments or whatnot that are hurting their credit, or maybe they have extensive student loans out there that are for forbearance right now. Those people honestly can qualify. So once you're over, especially the first-time homebuyer market, once you're over a certain score, it doesn't matter if you have a 660 score or an 850 score like you had talked about. You get the same rate, and basically everything down the line on that side is the same. So we can work with credit, and we do a lot of also credit guidance. So if there's things that show up on the credit report that maybe people were not aware of, or things that they may need to clean up, we also have the ability to kind of go to them and tell them what is most important currently and what would affect their score positively in a way in which they can get pre-approved for a house as fast as possible.
Yeah, that sounds awesome. And, I mean, absolutely. I can't say how many people are like, oh yeah, my credit's only 725, and I'm like, well, that's pretty good credit.
That's wonderful.
I
Yeah.
think that just goes back to most. I mean, most people don't understand how credit works to begin with. We're not really taught that very well. So, third thing here, co-borrowers. A lot of people, think they have to go and borrow by themselves, and so that's not necessarily the case as well, right?
Right, and that's both with government financing, FHA, and conventional financing. You can actually have non-occupant co-borrowers. So in this town, because we see a lot of borrowers who are younger because of the university and our growing community, we can have parents, we can have relatives, we can have grandparents step in and help be a co-borrower for these loans, and they don't have to occupy the property. They can just use their credit and their income to help their borrower qualify. And it's a wonderful program. You only have to have 5% down on the conventional side. You can have only as little as 3.5% down on FHA. And going back to our NIFA products with first-time homebuyer or second mortgages, you could actually again get in there for very little and have a co-borrower help you qualify for the home.
Awesome. And yeah, I know I've had tons of clients utilize that as well. So gift money, right? So it doesn't take 20%. It doesn't take $60,000, but maybe they don't apply or they can't get that $500, but they can get gift money. Tell me about that.
Yeah. So along those same lines, almost like co-borrowers, if you have a relative or if you have somebody in your life that you have a relationship with and it's documentable, then you can get a gift for a lot of that down payment and closing costs from that individual. And it's a very easy process. On the conventional side, honestly, we have a lot of people that you fill out a single sheet gift letter. There's a form letter on it, and then we get a copy of a canceled check and then a deposit slip into the bank account, and that's it. We can use those funds for down payment and closing costs with as simple as one written check from a relative or a parent or an established relationship.
Awesome. Yeah, again, we've had clients use that. That's a great resource that most people don't know is there. That you can just go, get money from a family member to help out. And a lot of family members are more than willing to do that because home ownership is the American dream and a great way to build wealth over time. So, the fifth thing here, and this comes up quite often as well, is people just unsure if their employment history and how that lines up will allow them to buy a home. So let's talk about employment. How long do they have to have their job or be employed? What's that look like?
Yeah. So again, there's a lot of myths out there regarding having to be in a job for multiple years, and what we find when we sit down with people is often they especially coming out of COVID and a lot of the job changes that have been going on, that they immediately think, well, they have to be in a job a year or 2 years before we can use that income, and that's just untrue. If they've had a history of having a job, or even if they've been in school, if they step out of school and have graduated and they take a job, we can almost immediately, if they're going into a full-time position, take that income and use it to qualify. And in fact, if you have school teachers or professors that are going to be starting in August and they know that they're already have been hired, as long as they're inside 90 days and it's a full-time position, we can use that as well. So we have a lot of people who are going to be closing in late May or even mid-May because they're going to be starting at the university or starting at Lincoln Public Schools. And as long as we get an offer letter with no contingencies, which almost every offer letter nowadays is signed by both parties, we can use that income to qualify.
Awesome. Well, guys, those are the 5 most common things. I can tell you, I talk to people all of the time about these 5 topics, and I'm sure you guys do as well, because we send the same people that I'm talking to your way that have these issues. So, Chris, down payments, credit, co-borrowers, gift funds, employment, all there. I appreciate your time today, guys. Those of you guys watching, if you are looking to learn more about getting financing on a home, which most of us need today, feel free to reach out to Chris Elgert. We'll have his information in the comments below. Chris, thanks so much for your time today, man.
You bet. It was wonderful.
Hey, thanks so much for checking out our video and watching till the end. If you're looking for more content about real estate, just simply subscribe over here to the right. And if you want more information on what your home is worth, check out sellyourhomelincoln.com to get an evaluation done, and one of our listing specialists will reach out to you to help you determine that final price. Thanks again.